Hello and welcome to another video. I'm AD from Pixel Profits, and this is part 4 in my series of videos on market structure. This one is going to focus on internal structure, microstructure, and how to identify a range. If you haven't seen the other videos in this series yet, I will put a link on the screen right now to those. For everything in this video to make sense, you need to understand the concepts that we've covered in those videos, so go and take a look if you haven't already. Okay, so in the last video, we looked at how we can track external structure and draw it on a chart in a fairly mechanical way. In this video, I'm going to show you another mechanical method that you can use to map internal and, to an extent, microstructure as well. These will show you how, where and when price will move within the external structure to create the next area of external structure. So, for example, how price moves between one external swing point and another. This is going to add a whole new level of precision to how we read price, and as we move through the series, this is just going to get better and better. So this is going to be quite a rules-based system, and once you understand how to do it, you'll be able to go away and track structure with very little room for doubt or discretion. In my opinion, eliminating discretion from trading, where possible, can lead to being much more calm and relaxed when on the charts, because you just need to focus on following the process and repeat it over and over, which should stop you from hesitating or second guessing yourself. Now, I'm actually pretty excited to get this video out because although there's still loads of important stuff for me to cover in this series, I kind of feel like with just these 4 videos so far, you will be a significant way on your journey to having everything you need to build your profitable strategy. I think that after practicing the things I'm about to show you, you're going to have a pretty good idea of how to read price. When putting everything together that we've done so far, I think this might be the point where you have one of those light bulb moments where something just suddenly clicks. I hope so, at least, because what you should have after this video is quite a large part of everything that you're going to need. All right, so I'm looking forward to this one, so let's get started. So how does price move within, or we could say between, the external swing points? How does internal and microstructure build and create this external structure? And how can we track it? Well, to do that, we're going to start with 2 key concepts that are interlinked, and these are change in the state of delivery and order blocks. I have a separate video on order blocks and a change in the state of delivery with loads of additional information. It also shows more examples of tracking them on the chart, which is exactly what we're going to do right here in a moment. So you don't need to watch that other video right now. I'm going to give you a quick crash course on order blocks and changing the state of delivery right now. But I definitely recommend that you go and watch the other video after this one to get that additional info. Okay, so here comes the key stuff that you need to know. So you see on the chart here that I've started drawing out some structure. You know, you could go back forever and draw structure, and we need a starting point. So what I've done is I've said that, okay, we're in a downtrend from before, okay, and this was the last break of structure, let's say, and we came down, and what you probably recognize from the previous videos is this reversal pattern here, where we break structure to the downside, we come back up for a pullback, we come down again, and we expect to break this structure, and then if we expect the trend to continue down, we obviously want to come back up and then continue down and so on. But instead, we create lower low, lower high, lower low, higher high, higher low. So now we've got our reversal pattern, right? So at least for the short term, we are trending up, okay? So we've switched from a downtrend to an uptrend. Now, how can we use order blocks and changing the state of delivery within this? Let's zoom in a little. Okay, so if we go back to here where we've got this down move, we've got this up move, we've got the down move, and then we expect to come back up and then pull back and then expand downwards and, you know, continue that trend, right? So that's what we expect. But instead, what happens is we break through this previous high, okay? So that's from our previous videos. Now, order blocks, changing the state of delivery, how can they help us? Let's talk about briefly what an order block actually is. A bullish order block is a series or single down close candle that gets closed above. Okay, I'm going to draw one and then I'm going to explain it to you. Okay, so let's zoom in a little and so we can see a little better what's going on here. So here we have a series of 2 consecutive down close candles, okay, bearish candles. And if we measure from the body of the top one, the highest one, and we look for when that body gets broken through, as we can see here with this bullish candle. Okay, so we've got the down close candles that then get closed through the body here. That is what we call a change in the state of delivery. And that confirms that these 2 candles are an order block. Said in a slightly different way, you could say that it's an area of supply and demand. Okay? So what's happened is the price has been pushed up, it's been pushed down, and it's pushed back up. Okay? So when we get the close above the body of this series of down close candles, the highest body here, we have a change in the state of delivery. And what we're saying is that the price has gone up, it's gone down, and now it's going back up again. Okay? Now, if we apply the same idea, again, we can copy this, and where is our next down close candle? Right here. Now, if we draw from the body, it's a single candle this time. We come up, we come down, and then we break through the body with a close above the body of this down close candle. And that gives us our next change in the state of delivery and our next order block. Now, if we continue this process going up, we have another series of down close candles here that get closed above. So we draw our change in the state of delivery line from the highest body here, and it gets broken by this candle right here. Apply the same logic again. We drag out a new line. We have a new series of down close candles here. We draw from our body there, and eventually we get a close above. And we also get, as you probably noticed, another down close candle that gets closed above. So these down close candles that get closed above are bullish order blocks, and they are confirmed when you get this close above the line, which we call, above the body here, where we've drawn this line, which we call a change in the state of delivery. And we're on the 4-hour charts. I've just marked them out as 4-hour change in the state of delivery. Now, of course, if you go down to a 15-minute chart, you're going to see exactly the same thing, or the 1-minute chart, whatever. You can track this on any time frame, doesn't matter. We're going to get into that in detail later on. But for now, we're sticking on the 4-hour charts. I want to label these out as 4-hour change in the state of delivery / order blocks. The 2 concepts, change in the state of delivery and order block, are the same thing. It's just that you're using the line to confirm to yourself when it's actually formed. And it makes it easier, I think, especially when I'm showing you this, to track them by just drawing these lines each time. Okay, now if we continue to move upwards, we have another one here, right? It's small, doesn't matter. It's a small down move, or bearish move, if you like, in an uptrend. We just zoom a little bit out now. And we can track another one here. I think you get the idea now. Now, we'll talk about this bit in a minute. But what I want to bring your attention back to is I want to show you a bearish order block, because then we can talk about what the difference is and what's happened here. So, a bearish order block, as you might have guessed, is just basically the opposite. So where you've got a series of up close candles that get closed below the lowest body this time, rather than the highest body on these, it's the lowest body that gets closed below. We have a order block here then. You know, this basically this area here is an order block, or an area of supply and demand, if you want to call it that. And they get closed below. And so we have a change in the state of delivery. Now we're going bearish. Okay. Now, does that make sense when we're looking at this? Well, yeah, it does, right? Because we've come up and then we've broken this. And now what we're expecting then, if we take this leg of price, we're expecting the next series of down close candles to get closed above if we're going to continue, right? So we'd want to see that this candle here has a body close above. And I don't know if you can see that, but that's on the wick, but I want it on the body. There we go. Tiny little wick there, but it's important that we do it the same every time because this is a mechanical system. So you need to do it the same every time. So where we come up above and then we come below, what we would want to see really is we want to see these series of down close candles get closed above. But do we do that? No. Look, we come back up here, there, and we'd want to go through, but what do we get? We get a failure. And what do we know about failure? Failure normally leads to a reversal, right? Or something new happening. And of course, in this situation, exactly that happens, okay? Now, you might have also noticed, let me draw it out for you, that you've got a series of up close candles here that get closed below. Now, when you see bullish and bearish examples immediately after each other, what that tells you is something is changing. Because if we come back down and we study this area of price, let's look for some bearish examples of order blocks within this price leg, okay? We've got all the bullish ones marked out. Can we find any bearish ones? Let's grab one of these and let's see. So for a bearish one, we want to see a series of up close candles getting closed below. So this would be, I've actually got a tool for this. You could copy this if you like as well. When I'm thinking that a order block or change in the state of delivery might occur, might be formed, I have this line with a question mark saying, you know, if this gets broken, this is where my bearish order block would be, okay? So what we need to track then is we have this series of up close candles. Does price come down and close below them? No, it doesn't. Okay, so there's no bearish order block there. Okay, all right, well, let's move up then. Where's our next series after this series of up close candles? Where's our next series? Here. We track the body, remember? Do we get any bearish candles closing below the change in the state of delivery line, which would give us a bearish order block? No, we don't. So then we come up again. We'll track our next series of up close candles. Do we get this series of up close candles getting closed below with the body? No, we don't. Okay, so we have no bearish order blocks so far, okay? Same thing again. Here, series of up close candles. Do they get closed below? No. Next, series of up close candles. Do they get closed below? No. Series of up close candles close below? No. Series of up close candles close below? No. Well, actually, eventually, yes. Here, right? So what you notice is in this move upwards, was there any indication there, if you're tracking this with order blocks, was there any indication that price was turning bearish? It's quite clear. It's all green, right? So no. But up here, you're getting that indication that either there's going to be some sort of pullback, which, right, when we break structure here on the external structure, what do we expect after we break structure? A pullback. When's that going to happen? Well, if we track order blocks, is it going to happen here? Well, apparently not, because we're bullish. Okay, we'll follow it up. Is it going to happen here? No, apparently not. We're bullish. Is it going to happen after this series of up close candles? Aha, okay, we've got a change in the state of delivery. So this first bearish change in the state of delivery here is our first indication that where we were purely bullish before, now we're switching to potentially be bearish. Now, when you get this change here, one or two things are going to happen. You're either going to get a pullback three things, I guess. You're going to get a pullback or a complete trend change, or you're going to get a consolidation or a range. Now, the way we can tell if it's going to be a range or not is when there's loads of mixed signals start to appear. Okay, you get bullish and bearish changes in state of delivery all over the place. And we're going to come to that in a moment, right? But for now, let's just focus on this area. So what do we have then? We've closed below our series of up close candles. Do we now close above this series of down close candles? No. So we remove that because that's not valid, right? That is not a change in state delivery because we haven't gone above. Do we close below this single up close candle? Yes, we do. Let's add another bearish order block. These series of up close candles, we've already drawn this one. Do we close below them? Yes. So where we've switched from purely bullish, now we switch to purely bearish because none of these down close candles, oh, okay, there's one. Most of these down close candles are not getting closed above. This one does. So what is this area here? What is that? That's basically a range, right? Now this is 4-hour chart. Imagine what that looks like on a 15-minute chart. That's going to be a lot of this. So, as I said, when you get these mixed signals, you're either going to get a range, a pullback, or a trend change and expansion lower. Either way, or at least two of those scenarios, mean that price is going to go down, right? Here, we had no reason to think price was going to go down at all because it's all bullish. There's no bearish examples within here. Now, if we go back to our reversal pattern, this is linking all the concepts together, right? We go back to our reversal pattern, we come down, make a low, lower low, lower high, lower low, higher high, okay? What do we expect if we've broken structure here? We expect, after a break of structure, we expect a pullback, right? So after we got past this line, these order blocks are valid, but we need to start questioning that this is probably going to change soon. Do we want to start taking trades in here? We could. I mean, this is a 4-hour chart, right? If you're on a 1-minute chart, you've got quite a couple of days of price action there. But just sticking with the 4-hour chart, when we've broken structure, do we want to still be looking for longs? Your answer should probably be no, right? As we've discussed in previous videos. So we can still track the price and still say, okay, it's probably going up then because we've got a bullish order block here, and it does. And then we've got another one here. It's probably going up a bit more. This is 8 hours here of, these two are 8 hours of price action, right? But we're looking now for a pullback. And when can we see the pullback started? When this indecision starts to happen, right? When this change in the state of delivery happens. Because we're now turning from purely bullish to mixed, but in fact, the majority now, bearish. And when we really get the final nail in the coffin, if you like, is when we get this big expansion candle downwards. Because that has broken us out of this range. I'll just get rid of that range now. It's broken us out of that range, and it's confirming that our pullback is in full effect, okay? Now, let's track price again. We've got a series of bearish candles here. Do they get closed above? No. Okay. What about this series of bullish candles? Do they get closed below? Yes. Okay. Or our change in state of delivery. Now, we've got a bearish candle here that gets, does it get closed above? No. Do these series of bullish candles get closed below? Yes. Okay, so we're still continuing downwards then, right? What have we now got in this last little leg? We've got this change in state delivery, this one, okay? We've got 3 in a row now. So does this start to look a lot like this, but just the opposite direction? Yes, because we're not getting any closes above these bearish candles, which would confirm that we're getting a bullish order block, right? We're getting all closes below the up close candles. So let's carry on. This is our last series and we've closed below. Now we've got a series of down close candles. Do we close above them? Not yet, no. We've got an up close candle. Do we close below it? No. Now, just think about that for a moment. What is that? We don't close above this, okay? And we don't manage to close below this. And if we continue with our bearish order blocks, we would want to see that get closed below, right? So back to our external structure, if we're expecting things to do their jobs, what should the job of this high have been then? If we want to continue down, let's draw it out. We want to continue down, and we can do that. Okay, we want to see this, right? Okay, so we would want to see that this high puts in a new low. What happens? Does it manage to break here, confirming this is an order block and a change in the state delivery? Does it break below? No. Nowhere, in fact. Look. Okay, can't get below here. So what does that tell us? Let's continue using our order blocks to track it and we'll see. Does this bullish candle get closed below? No. Okay, failure. Okay, failure to do its job. So this high has failed to push below here. You see how we're using our external theory just the same way as the internal theory, right? So when we get failure, that's another sign that something's changed, right? So let's keep tracking. We've got a series of, I'll just get rid of that one. We've got a series of bearish candles. Do they get closed above? Not yet. Again, failure. This was supposed to come up and close above if we were going to go bullish. So we've got a failure here and a failure there. Okay, now we know we're in a range. Okay, and look at the price. From there to there, what's this? And I know that doesn't look like many candles. This is a 4-hour chart. That is days. That is from, that happened on Thursday all the way through till following Tuesday. So that's, not far off a week of price action, or at least 4 market open days anyway. So, sorry about that. I clicked away to a separate chart, so I had to press the wrong hotkey. So I had to come back and get the chart back up like this. Let's continue. So what we were talking about was that when we've got these failures here, right, the failure to break below here, let me draw them out just to make sure it's super clear. Okay, failure to break below there. I'll zoom in a bit. And failure to break above here. Okay, I'm just going to get rid of the range box for now. So neither of these caused a change in the state of delivery. So they both failed. This high failed to put in a new low. This low failed to put in a new high, or this low failed to put in a new high, whatever. And so now we have a range, right? And again, using these theory of changing the state of delivery in order blocks, we can quite easily see that that's the case. Now, if we just continue with our logic, okay, this series of down close candles doesn't get a close above yet, okay? This series of up close candles, does it get a close below? No. Range. Does this down close candle get closed above? Yes. Okay. And that's our first indication that in this range, that's our first bullish indication using order blocks, right? We closed above the down close candle, okay? Now, this up close candle, does it get closed below? No. Does this bearish candle get closed above? Not yet, okay? It does here, but not yet. Do these bullish candles get closed below? No. Does this bearish candle get closed above? Not yet. Well, I mean, it's close enough, right? So now we have another one there. And if we want to draw it out, we also have another one there. So down closed candles getting closed above, yes. Down closed candles getting closed above, yes. Down closed candle getting closed above, yes. Any of these up closed candles getting closed below at the moment? Not yet. But then when we close above, right, we're still in our range. When we come up and we get this bullish change in state, we've got 3 of them now, and they're minor, right? I mean, they're not clean, if you like, but there's 3 bullish ones and so far no bearish ones. So if I take out another bearish one, where do we get a bearish one? Well, we get one here. We also get one, I guess, there, because we close eventually below this one. We get one there, I guess. You see how messy this gets? But this is important. Okay, do we close below that one? No. So what is this? Up, down, up, down, up, down, up, down. What is that? It's a range. We already know we're in a range. We already knew when we failed over here. So we expect this, because look how clean this is on the up moves. Look how clean these last few here are on the downside. And this is only a pullback, remember, because we're expecting this to be an uptrend. So now again, when we start to pull back and we're clean, and now we get a range, what's going to happen, do we think, from this range? We pull back into this previous area, right? Which is exactly what we expect in our reversal pattern that we drew on earlier. Okay, we've come down, up, down, higher, higher low. What do we expect now? Once this low's been put in, we expect to go up past this previous high if we're going to continue in the uptrend. How can we tell that's going to happen? Well, we were bearish, 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 bearish. Okay, well, indecision and then bearish, 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 indecision. Now, what do we want or need to see for us to sort of confirm that we're going to start to go up? Well, we need to get out this range, right? So we did break out the range. And here we start to see that the moves get much more significant. Okay, see the candles are increasing in size. The break is quite nice and clean. And we come up, we don't close below these. Okay, so now we've got this cleaner break and we get out of the range. So now what, if we're going to continue up, what do we need? Okay, we need these up close candles not to get closed below. And we need these down close candles to what? Get closed above. There we go. There it is, right? So let's keep tracking. We'll draw this out. Another down close candle gets closed above. Another down close candle gets closed above. Now you see where we're going with this, I think. I hope so by now. I know it's annoying drawing all these little sections here, but again, do we have any up close candles that are getting closed below? No. No. Up close candle, does it get closed below? No. Up close candles, do they get closed below? Not yet. Okay, so again, what have we got? We've got smooth bullish action. We have consolidation / indecision. We have a breakout of the range. And then we have just bearish structure. Okay, bearish change in state delivery order blocks. Then we have another area of consolidation, indecision. Okay, you can tell because look at the mix compared to this and compared to that. Okay, and what do we get now? Pure bullish action. Okay, where are we expecting to go? Well, we're expecting eventually to break through here, right, with a breaker structure. So by tracking this internal structure in this way, we're seeing, where is the turnaround coming? Here the turnaround's coming. Here the turnaround's coming. When it starts to get messy or failure happens or both. Usually both are happening at the same time. And when pure success is happening, we're expecting to just continue in the direction of the trend. Let's keep tracking. Bearish candles, do they get closed above? Now, this is interesting again, okay? We've got bearish candles. This bullish candle, what happens? You've seen it now, right? You can't, once you see this, you can't unsee it. What happens with this bearish candle? Bullish candle. Gets closed below. Okay, so where this was pure success, pure bullish success every single time, no bearish examples at all, why is there now a bearish example happening? Because something's changing. Let's keep tracking. You'll see it, right? You already can, I'm sure. But I want to give you tons of examples of this so you really get it clear in your mind. I'm just going to start drawing them now because I don't really need to talk to you about every single one, I don't think, anymore. Because you see it now, I think. I hope so. If you don't, go rewind a little bit. Okay. We've got pure bullish action. We start to get mixed. What does that mean? We're probably in some kind of range. Look, we break, we break, we break. We're probably in some kind of range. So if we just, draw this out, once we get with this mixed action, we want to get out of it, okay? And we want it to become clear again. Because we're still expecting that, on the bigger picture of things, the price should be coming up to break through here. That's what we're expecting because we had a reversal pattern. We've had a failure to push lower. We're expecting, this is a weak high now, right? Because we don't have the breaker structure yet. It's just because I've drawn it out in hindsight, but we don't have a breaker structure so far if we were here in price. But we're expecting this to be weak and get broken through. Okay, so that's our target. So when we're coming down again, we failed to make a new high there, so we're expecting some down movement, right? This is our strong low that we don't expect to get broken. So strong, weak. Okay, so when we're expecting this, if this pullback happens, we're not expecting it to come down here if we're going to continue upwards. So even though we've got this bearish price action or these bearish order blocks forming here, we have to consider that we still are bullish. Sorry, we're still expecting to go up. Okay, let's keep tracking. We'll draw another one out. There's another bearish example. Okay, and we've got this series of we've got this series of, again, up close candles that get closed below, just right here. Yeah. Here, what have we got? We have a bearish candle that gets closed above right here. Yeah. Now we've got what we got now? Mixed signals again. So we were again pure mixed signals, pure mixed signals. So let's continue. You know, I know you're seeing this now. I hope so. And I really want to make sure that you guys have this down, because this is super important. And I'm just going to start drawing stuff on now that I see, and we're going to see the power of it. Really, I mean, it's so simple, right? You can't really get this wrong. So let's just make sure we haven't missed any. We've got a series of up close candles that get closed below. We've got a down close candle that gets closed above. Range, indecision, trend change, whatever. Have we got that? You know, let's see what we got. We'll take that high, low, high, low, this high, and we come up here, and then we start up again. What have we got there? Let's just draw it to the side. It's a bit weird, but look, lower low, lower high, lower low, lower high, higher low, higher high, reversal pattern again. Okay, so I mean, you know, when these start to happen, you've got to start to think, we're expecting this to get broken. This is a pullback. When's it start to fail? Well, not here, when it's pure bearish. Okay, it's going to start to fail when this happens, this indecision, these candles that are, you know, disagreeing with each other. So again, though, let's track it. We don't really have anything more there. I think that is it, right? We've got the down moves, and then we start to get these breaks. And really, this one here, this last series of down close candles that gets closed above, and then we get another series of down close candles that gets closed above. That is really starting to signal, if nothing else, that we're going back towards these highs. So we come up. Do these bullish candles get closed below? No. Do these bearish candles get closed above? Yes. Do these bullish candles get closed below? No. Do these bearish candles get closed above? Yes. Now, I'm not sure how much more of this I really need to do to convince you to go away and have a go at this, okay? Because, again, what have we got? Pure bullish action, right? Pure bullish. And then here, or here, this is our first sign. Here's our first sign that things are going wrong. Here's our next sign that things are going wrong. See, this one candle destroys that one, this one, and, in fact, this one. What have we got? Indecision again. What does that mean? Pullback, reversal, or range. In this case, because we've broken structure, what do we expect? We expect a pullback if we're going to continue with the current trend. So when we start to get this, what's our first sign that pullback's starting? It's the failure of the bullish momentum to solely continue. No, these pure bullish moves every time, and then suddenly we get this bearish one in the middle of there. Okay, and then we get another one and another one, and then what do we get? Here we go again. A bullish candle gets closed below. Yes, here, and so does that one. So I mean, they're basically the same thing. Do any bearish ones get closed above? Yes. Does a bullish candle get closed above? Yes. Oh, sorry, a bearish candle get closed above? Yes. And then immediately after, a series of bullish candles get closed below. So what have we got again in here, right? Let's look at this. Okay, go right back. Pure bullish, mixed, something's going to happen. Okay, pure bearish, mixed, something's going to happen. Pure bullish, mixed, something's going to happen. Pure bearish, mixed, something's going to happen. Pure bullish, mixed, something's going to happen. You know, I sound crazy, don't I? But I mean, I'm not making it up. Bullish candle gets closed below, yes. Another bit of indecision here, right? Because we have this. This is getting a bit messy now. It doesn't matter. Let's grab that. We've got a bearish one here, bearish candle that gets closed above. Okay, so again, a range, right? Look at it. That is a mini range. I mean, on another chart, that's a big range. That's just because this is a 4 hour. But look, there's consolidation. What do we expect is going to happen after consolidation? At some point, it's got to break out of there, right? So the last move we get is this breakdown. Now, what are we doing here? Let's grab this. Bearish candles, they get closed above. And it goes on, guys, and on and on and on, okay? There's a bit of an indecision here because it's a mini range. You've got a bullish break there. And, of course, you have this bearish example just here. So, again, it's a mini consolidation, like a mini range. Once we break out the top of it, yep, off we go again. And this just continues and continues. I just want you to think about now how pure, you know, it can be and how mixed it can be and what that tells you. But anytime something is taken, you know, we've had this rule, but let's just go over it. I think I've mentioned it before, but let's talk about it again. Anytime something is taken or fails or succeeds, we expect something new or different to happen, or an accumulation, which again is something different. So when something is taken, we haven't really got to that yet because we haven't looked at liquidity. Let's focus on when something fails. Oh, well, we can say these highs have been taken, right? This high has been taken. Anytime this break of structure happens, we expect something different to happen, okay, which it does. Anytime something fails, here, failed to make a new high, we expect something different to happen. Anytime there's accumulation or range, we expect something different to happen, okay, because it's not going to do this forever. It can do this for a long time. It's not going to do it forever. Now, one more thing that I want to show you, which is quite interesting, is using these order blocks to frame points of interest. Now, we're going to cover this and other things in our next video, but what I want to show you is something interesting here. Let's just take this example, okay? When we break above the line, when this candle closes and is finalized, we know we have bullish order block and bullish change in the state of delivery, right? Now, what happens immediately after on the next candle? Look, I'll move my mouse out of the way, but what does that candle do? We close, or the candle's finished. This is just the high, right? We come back down into the order block, and then what? Off we go, okay? On this one, actually, we come down in the next two candles, but we can't break below this area. Now, generally what people do is they draw out, they ignore the high wicks on the bullish ones, or I do at least, and we just take the body where we took the change in state delivery, and we take the low, okay? So let's just say we took a trade, okay? We take a trade on the change in the state delivery line, which is basically there. Oh, I'm sorry, let me try that again. There. We put our stop loss above the low, below the low or on the low, and we target whatever, 3 to 1, whatever it is you want to do. Okay. I mean, this one, you've got loads, but doesn't matter. So price breaks above, revisits it, 2 taps back in, look, 2 taps, and then off it goes. Now, this one actually got revisited over here, still provided support. And what do you notice? These lows got swept inside here. These lows got broken below, taken out the liquidity and then continuing up. This order block, actually, if you'd taken one there, you didn't get you got a break above. You didn't get a revisit, right? Didn't get a revisit of the line until right over here. And by then, it's gone all the way up to here. I don't know if I would take that order block if it failed to get tagged in immediately. I don't think I'd want to wait days and see if it gets revisited. Okay, especially as we've got this one sitting down here and some other things which we'll talk about later. That's for a future video. I just want to point out that when these get broken and then the price comes back down into them, the price again, didn't go below this low, right? It just continued up. When price breaks this one, it doesn't revisit it. Same with this one, it doesn't get revisited. Although, of course, if we're going down to, if we look at these 4-hour ones and then we drop to a 15-minute chart, we will see some opportunities, but we're not doing that now. This one, okay, bearish order block, gets closed below, price comes back up, 1, 2, 3, can't even get there the 4th time. Right, we short that from there, stop on the high. Now, you don't always want to do this, but we'll talk about that maybe in another video. Yeah, whatever, 3 to 1, whatever, you could get more if you want. But the point is that a lot of the times when you're not in one of these, consolidation areas, these order blocks are going to hold quite nicely. And look, even over here, it came back up. Now, I wouldn't necessarily want to take a trade, but I might start paying attention when this is happening just to see what happens here, because we're expecting a break there. But if we start to get this turnaround, we start to get these bearish order blocks, well, okay, that was a good area, right? So anyway, just what I wanted you to see is that these order blocks get revisited. And here again, look, tiny little candle or tiny little body, breaks above, revisit, straight up. Okay, here again, breaks above, revisit, straight up. Okay, then we get this turnaround, we get the second high there and all this mixed stuff here. But this one doesn't get revisited by the looks of it. No, doesn't. But you can keep these on the chart, these old ones, for future revisits, because they can provide, if they haven't been mitigated, they haven't been touched, and they're fresh, then you can obviously get trades from these in the future. Just be careful when you've got choppy price action, or you have multiple order blocks that haven't been touched, perhaps, like this one hasn't been touched. So, it has an attempt here, it goes right through this one to have another attempt to get back up there. You have to be careful when there's a completely unmitigated, untouched order block above another one. Okay, just be a little bit cautious. But yeah, you can get trades out of these, and we're going to look at this in much better detail. I just wanted to, some of you might have noticed already. This one here, look, broke out, revisit, straight down. So you could get trades out of these, and especially when you drop to another time frame and look for another order block within this area on, say, a 15-minute chart, you can get much more precision. What else to talk about? Let me just mention quickly, when you get a large order block, like, let's say, I don't know, this one here, right? This is quite a big order block. It's a lot of price action there. 8 hours of action there. So what you can do, if you were looking to enter on this line here, what you can do is you can measure out from the top, like I did before. I think you saw that, to the bottom. And you could say this is the mean threshold. Some people do the body to the body. You can also do that. That's fine. But either way you measure it, you can measure out the mean threshold, and we'll do body to body because that's what I did in my previous video, I believe. And then you can use the 50% as a sort of reference point to say, okay, look, if price comes back down into this order block, does it break below the mean threshold, which is just a fancy way of saying the 50% level of these bodies? Nope, it doesn't. It actually gets support and creates a new order block out of this previous order block, which, look, never got touched, right? This broke out, never came back. We're expecting to go bullish, but we're expecting after this break of structure to get a pullback at some point. We get a pullback, we get it into, now we've got to start talking about targets. Look, when we're up here, where might we reverse to? Okay, we can start looking. Well, this one hasn't been touched, I guess. Oh, yes, it has there. Okay. And it's been touched here. But what else have we got below here? Aha, a big order block there. Okay, price might come into there and have a reaction. And when we get our next order block out of there, an order block here coming out of another order block is something that's often called a propulsion block. And so we've got sort of a double confirmation. We've got this order block holding, and now we've got another order block forming. Okay, so we can expect that price is going to go bullish and give us a nice trade. And here again, we don't get tagged in if we're on the 4-hour chart, but yeah, you know, we got some good reaction there, right? So a couple of things about order blocks. That was a crash course, really, and I know I drew a lot of stuff on there, but I want you to see, focus, you know, most of your energy on there's clean price action, there's mixed. Now it becomes clean again, mixed, clean, mixed. And we haven't tracked anymore, so I can't do it there, but yeah, you get the point, right? You've seen it all over here. Just go and do this for yourself in exactly the way I've described. Have a look at this again if you need to, and start tracking these yourself within the external structure you've drawn on the chart, and see how you can see what's happening within these external moves and how much precision we can really get using this. Hope you see and understand how powerful that is. We're going to move on in the next video to looking at how price moves between external and internal structure. Internal structure is order blocks, but it's something else called imbalances and fair value gaps. And we're going to look at that in the next video, and the theory of how price moves between external to internal and back again. If you've liked this video, guys, hit the like button, subscribe to the channel for more videos like this. Hope to see you in the next one. Take care. Thanks for watching.